Hi everyone, so this question is question 2 from the 2006 higher level accounting paper for farm accounts, and I'm going to go through the statement of capital, which is the first part of this question. Okay, so the statement of capital, as we said, includes the assets and liabilities of the farm on the 1st of the 1st 2005. So it's very important that it's everything on the 1st of the 1st. You need to just find out the value of the farm on the 1st of the 1st. So at the top of the question, it tells us among the assets and liabilities of Sean and Mary Kelly, who carry out a mixed farming business, there are a number of items mentioned there. Okay, so we have land and buildings, we have machinery, electricity due. So electricity due is an expense. That's something that needs to be paid. We have the value of the cattle. We have a milk check due for 2,400. So that's an asset or an income item because it's milk that the farm has sold and they have a check worth 2,400 for that. Okay. We have a stock of fuel and we have a value of sheep. Let's just have a quick look here at the tables to see if there's anything else we need to include. So there's a balance there of 2,800. That's the bank balance at the start of the year. So that always has to be included in the statement of capital. The rest of the items kind of happen during the year and it's specific to milk and cattle and sheep. I just see there's a 6-month interest from a 4% investment bond for €600. So that means that the family has an investment. It could be possibly in a bank. So we'll need to do working to calculate what the investment is worth. Let's just go over here and see if there's any liabilities. So I can see a loan there and it has 18 months interest at 6% per annum on the 30th of April. Okay, so remember again, we're only including items up to the 1st of the 1st. So we don't include January, February, March and April for 2005. So that's 4 months. So we'll be including 14 months. Okay, we'll do a working on that one as well. So I'm just going to scroll down here and go through the working for the investment bond first of all. And then I'll go through the working for the loan and the loan interest. Okay, so in relation to the working for the investment, it told us that 6 months interest was €600. So basically they're earning €100 interest per month on this investment. So then annually the rate of interest or the amount of interest would be 1,200. Okay, so to get the actual value of the investment, we divide 1,200 by 4, which because it's 4% interest, multiply by 100, and that gives us €30,000, which is the overall investment amount. Okay, so that's an asset for the farm. Then in relation to the loan, we have the loan interest and 18 months interest at 6% annually, and that's €16,350. If the interest annually, which is 12 months, is 6%, well then interest for 18 months is 9%. Okay, so it's a year and a half would be 9% then. So we're saying here the 16,350 is for the loan amount, but it's also for a year and a half worth of interest. So then what we have here is 109% with the loan, and the 9% interest is included at 16,350. So in order to find out the loan value, we put 100 over 109 multiplied by the 16,350, and that gives us €15,000. Okay, to calculate the interest then we put 9 over 109 multiplied by 16,350, and that's 1,350 for the interest. That interest again is for 18 months. Okay, so remember we're not including the months January, February, March and April for this year, because they happened during the year of 2005 and we only want to include items up to the 1st of the 1st. So we're including 14 months interest. We need to calculate that. So interest due on the 1st of the 1st is 14 months over 18 months, multiplied by 1350, and that gives us 1050. So then there's 4 months interest left over. So the 4 months then, to calculate that, would be 4 over 18 multiplied by 1350, and that gives us €300. And we'll use that for the income and expenditure account down further. Okay, so the working is done for that. So the statement of capital then is laid out just like this. Statement of capital, we have the assets and we have the liabilities. Okay, so that's the first part.